So let's start at the very beginning. What really is a stock? Simply put, a stock is a share in the ownership of a company. For example, if the company ownership is divided into 100 parts and you as an investor purchase one part or one share, then you will effectively own 1% of that company. Here is how the famous investor Warren Buffett defines a stock. See stocks as partial ownerships of businesses instead of stock tickers or pieces of paper which can be traded in the stock market.
Now that you know what a stock is, let's go ahead to the stock market or the stock exchange.
It is simply a marketplace where stocks are bought and sold. In older times, traders had to be present inside the exchange to buy and sell. But with today's technology, all transactions are done electronically and no one is required to be physically present at the stock exchange. There are two major indices in India, the Nifty and the Sensex. The Nifty is the main stock market index for the National Stock Exchange or the NSE. It consists of the 50 highest valued companies in India. And the Sensex is the market index for the Bombay Stock Exchange or the BSE, and it consists of 30 stocks. The majority of the trades in India happen through the NSE, and the Nifty today is an indicator to Indians and to foreigners as to how well or badly our economy is doing.
Stock exchange is a platform which allows buyers and sellers of shares to come together in a transparent and electronic way. It allows people to discover prices by continuously assessing the demand and supply and the valuation of the particular stocks, and that gives a fair price to the particular security, and then it helps in ensuring that each company is able to get the right valuation, and over a period of time it ensures that the capital is actually properly allocated to companies which are performing well or sectors which are performing well. Clearing and settlement function is an important function of the exchange. Settlement has to happen for all the trades which have been executed on the exchange. That is one more area where exchange plays a critical role. Over and above that, information provision is a critical function of the exchange. Exchanges provide a series of information about the companies which are listed on the exchange, which will be useful for investors to take informed decisions before they invest in any particular company. And another important area where stock exchanges play a critical role is the education, awareness and investor protection.
The other common phrases that you must have heard are bull market, like the one behind me, and the often dreaded bear market.
A bull market implies an upward movement in the indices when prices are expected to rise, whereas a bear market is just the opposite. It implies a downward movement and expectations of a fall in the stock prices.